Hi there, welcome to Infinity Living. And today I've written some notes and I'd like to talk about why different property owners choose to invest in different properties in Kenya. Yes, so the first reason that we have it's because of the different financial capacities. As investors, we have different budgets when it comes to investment, but the good thing that I want to tell you today is that both of you can be able to invest in the same location. An example of a location like Westlands that we mostly deal with, we have a one bedroom, or let me even start from the studio. We have a studio from 5 million, one bedroom from 6 million. That is one project. And a different project, we have one bedroom from 7 million, 8 million, 9 million. So you see, you two different investors can be able to invest in the same location. Let's talk about the three bedrooms. It's like Kilimani. You can be able to get a three bedroom from as low as 11 million. But 11 million, that is an off plan project. But someone else who has a budget of around 20 million, 30 million, they can still be able to get in Kilimani and in Westlands. And for those investors who are specific with locations, let's say like Westlands, you can be able to buy from around 16 million to 20 million. That is for different locations, but still you get to have a very good investment. And something else, it's about different investment goals. I'm ready to talk deeply about the different investment goals because we have cash flow investors. Where are you buying the property? When you're buying a property for return on investment, try to choose or to consider one that has good views. And when we talk about good views, consider property that is on the road. And in case if you like a project that is not along the road, try and consider buying facing the garden. You know why? Because of the views. We talk about the views, and that will help you still in the future to be able to get tenants. Because you know, when a tenant comes to rent your house, they're going to consider things like the views. Make sure that you're not blocked. Make sure that where you buy, it's somewhere that the next land, it's not coming to get built and block the views that you have. So cash flow investors, you need to really look into that. Something else is high rental return. Choose the projects that is on the road. Yes, I've said. And in terms of the high rental return, also you need to consider the amenities. Amenities are very important when you're renting an apartment. And for the future competition, we never know what the future holds. So for you to consider future competition, try and look at the amenities. So try and consider one, the views, two, the amenities, and the social amenities. Yeah. In case if the project that you want to buy doesn't have a lot of amenities, at least try and consider an apartment that is close to the supermarkets, to the malls, to good roads, of course, and hospitals. Try and put into considerations such things. The different type of investment goal, it's when you buy to stay. Yeah, you're buying the property, but your main aim is for you to live in it. You don't want to rent it out, let's say, especially at the moment. So maybe you can consider something that is not in a very noisy place. And you should also consider buying an apartment, especially for investors who are looking for three bedrooms or four bedrooms to live. Try and look at apartments that don't have the smaller units. Yeah, for you not to be able to deal with issues like B&Bs. So when you're buying a house to stay, if you're buying a three bedroom, try and look for apartments that have from 2, 3, 4 bedrooms. If you're buying a four bedroom, try and get a project that has 3, 4, 5 bedrooms. That will give you peace of mind. But when you get to buy an apartment that has from studios, one bedrooms, 2 and 3 bedrooms, just know that there'll be B&Bs there. And if you're buying the three bedroom for investment, yes, for investment, and maybe you're thinking of having a B&B in that three bedroom, try and look for those apartments that have the smaller units. Because you see, when they get to rent out, the smaller units in B&Bs, at least they can be able to give you clients. So different apartments fit perfectly according to what you want, according to what you're looking for. So whatever you prefer, just remember different apartments have different needs. Something else is capital appreciation. With capital appreciation, when you're trying to buy so that you can sell, try and consider projects that are on off plan. Yes, off plan basis, because you'll be able to get a very high capital appreciation. You buy maybe a 1 bedroom at 5 million on off plan, and you get to sell it at 6, 7 million when it's ready. Like an example, a good example is some clients of mine who got to buy a 1 bedroom in Westlands. That was 2 years ago, and they bought it at 6 million. Some of them got good deals of around 5.5 million, and right now they are selling those apartments at 10 million. In less than 2 years, the capital appreciation is around 4 million. So, and that was also because of the location where they bought. Those are things that you need to consider as an investor. Something else is about lifestyle buyers. If you're buying an apartment and you know that you love lavish lifestyle, or maybe you'd like something that is of high class, there are also different projects that have that feel. So we have a project that has full high to ceiling windows, and the view is around 180. And the amenities, they have the spa and the sauna, they have the theater, they have the golf golf course, they have the swimming pool. Some of them even have 2 swimming pools. So such apartments have a different type of feel, which gives you a different lifestyle. So for those clients who are also buying to live in the small apartments like 1 or 2 bedrooms, you can be able to choose or look into such properties. And don't forget, when the project is prime, even the price will be slightly higher. But then you can be able to buy it on off plan so that you can get a stretched payment plan of around 1, 2, or 3 years. We even have 3 years. Another reason why different property owners choose to invest in different properties, it's because of the risk. Yes, because of the risk. And we have conservative investors. Conservative investors, mainly it's those who choose to buy land. When you are investing in land, try and make sure that the location that you're buying the land, it's a very prime location that you know it's going to appreciate. Don't guess, be sure about it. Something else about the land. When you buy land, try and buy a place that you're sure you'll want to retire, so that you don't have maybe to sell it later. Because don't buy land and then when you want to sell it, it becomes so hard to sell. But the land is not as easy to sell as when you invest in the high-end apartments. So you can consider that. And for moderate investors, these are investors who buy mainly the ready apartments or almost ready apartments, which is good because most of them they buy to rent, some buy to sell. Those are the different risk investors that we have: the moderate, the conservative, and the major one is the aggressive investors. These are the ones who buy projects on off plan basis. Some of them buy projects before they even get to launch. And those are the investors that get to have very high capital appreciation. Because you buy a project, let's say a 2 bedroom, you buy it at 8 million at the moment. And the minute the project is done, in 2 years, you get to sell it at around 12 million, 13 million. So those investors are the aggressive investors. Another reason is the time horizon. What do I mean about time horizon? We have short-term investors and long-term investors. Short-term investors, they buy off-plan so that they can sell it. You buy to sell, just like how I said previously. You buy at 5 million, sell it at 10 million. Or you buy a 2 bedroom for 8, 9 million, you sell it at 13 million. That is why you buy to sell. In 2 years' time, you get a profit of around 4 million, you go and buy another project on off plan. In 2 years' time, you sell it. So there's some investors who actually invest in such a way. And we have the long-term investors. Those are investors who get to buy and rent. We can actually call it like retirement investment. Yeah, because you get to have retirement income. You buy an apartment, but when it's ready, you don't sell it. You rent it out, which is something that most of you should actually consider. The last reason is location preferences. We have the high-end location, we have the middle location, and we have the low locations. And you can be able to rent it out at around 30,000 or even 25,000. Those are the middle class locations. So those are different reasons why you as an investor get to invest. And if you may need any more information, our number is always on the screen. You can just call us. Thank you so much. Bye. See you in my next video.